What is market capitalization? How to calculate market capitalization and how to interpret market cap. In this video we start off with the definition of market capitalization. We go through an example of calculating market capitalization, discuss grouping companies by size of market cap, dive into the meaning of companies having a low market cap or high market cap, and discuss how market capitalization relates to takeover bids. The definition of market capitalization. Market capitalization, or in short market cap, is the market value of a company based on the total value of all its publicly traded outstanding shares. This implies that you cannot calculate the market capitalization for companies that are not publicly listed. The formula for calculating market cap is simply to take the number of outstanding shares and multiply it by the share price. Let's take an example of calculating market capitalization. We will calculate the market cap of Microsoft on November 13, 2018. The number of outstanding shares can be found in the latest quarterly earnings release. More specifically, at the bottom of the income statement that is included in the press release. A company discloses its number of outstanding shares in order to give background information on the earnings per share calculation. In the case of Microsoft, the weighted average number of outstanding shares for the 3 months ended September 30, 2018 was close to 7.7 billion shares. The second data point we need is the share price. The closing share price for Microsoft on November 13, 2018 was almost $107 per share. To calculate market capitalization, all we need to do is to multiply the number of outstanding shares by the share price. In the case of Microsoft, on November 13, 2018, the market cap was $821 billion, which on that date makes it one of the 3 biggest companies in the world in terms of market capitalization. There's an easy way to check whether our calculation of market capitalization is correct. Go to any website or search engine that provides share price information, type in the company name or ticker symbol, and scroll down below the graph. Market capitalization tends to be mentioned right there. $821 billion of market capitalization, just like the outcome of our formula. Which categories of market capitalization exist? There is no standard or official definition of market cap categories, but an often used classification is for small cap companies to have a market capitalization between $300 million and $2 billion. Mid-cap or medium-cap companies to have a market capitalization between $2 billion and $10 billion, and large-cap companies to have a market capitalization bigger than $10 billion. Is there anything bigger than a large-cap company? Yes, mega-cap companies, with the market capitalization of more than $100 billion. Is there anything smaller than a small-cap company? Yes, a micro-cap company with a market capitalization between $50 million and $300 million, and even smaller than that, nano-cap companies with a market capitalization below $50 million. So what does having a low market capitalization or a high market capitalization mean? That is an interesting question, but potentially not the best question to ask, because the growth or decline in market capitalization might be just as important as the absolute market capitalization of a company at a point in time. Here's a graph of the development of Microsoft's market capitalization over more than a decade. In November 2018, with the benefit of hindsight, I sure wish I could travel back in time 3 or 5 years to buy Microsoft shares at $40. Will I still feel the same in November 2019, November 2020 or November 2021? Time will tell whether market cap continues to go up or will move down. Hindsight is a great thing, and your guess of future market cap is as good or as poor as mine. If we do want to ruminate or speculate on low market cap versus high market cap, then here are some potential reasons for companies to have a low versus a high market cap. Low market cap companies tend to have no track record of impressive financial results, yet, or may have declining financial results. Many high market cap companies do have a track record of impressive financial results. A low market capitalization could be a sign of investor pessimism about the company's future, and a high market capitalization a sign of optimism. The share price of a company, and therefore its market capitalization, is to a large extent dependent on expectations for the future. A low market cap company might have low growth or even declining projections for future revenue, income and cash flow. A high market cap company may have higher growth projections. Besides expectations for the future, a share price and therefore the market capitalization also depends on sentiment. Is there low or high excitement about the company's strategy, technology and leadership? Lastly, the development phase that the company and its business units are in could also be important. A low market cap company could be a company in the embryonic or early growth stage with the best yet to come, or a company in decline with its best days behind it, or a company that will forever stay small. A high market cap company could be a company that has reached a certain level of maturity, a proven track record in some business units, but has continued exciting new growth opportunities. Keep those thoughts in mind when making investment decisions. And just like diversifying your portfolio across industries could help you balance risk and opportunities, diversifying between holding shares in small cap and large cap companies could improve diversification as well. To close off, what is the relationship between market capitalization and takeover bids? First observation, micro cap, small cap and medium cap companies tend to be the ones that are most often targeted with a takeover bid. They are sizable enough to make a contribution to the acquiring company's inorganic growth, its growth through acquisition, but not too big to be very risky to integrate. In other words, companies in this range of market capitalization are big enough to matter, but not necessarily so large that they could bring down the whole of the newly combined company in case the merger does not go well. Remember that market capitalization, or market cap, is the current market value of a company based on the total value of all its publicly traded outstanding shares. In case of a takeover bid, there tends to be an M&A premium of around 20 to 30% on top of the current share price. After all, you want to give the current shareholders a good reason to sell their shares to you and support the takeover. I hope you enjoyed this explanation and discussion of market capitalization. We started off with the definition of market capitalization, went through an example of calculating market capitalization, discussed grouping companies by size of market cap, dove into the meaning of companies having a low market cap or high market cap, and discussed how market capitalization relates to takeover bids. If you enjoyed this video, then please give it a thumbs up. On this end screen there are a few suggestions of related videos you can watch next. Please subscribe to the Finance Storyteller YouTube channel. Thank you.